So here we are in the euro, and just as a brief recap, we spent a little bit of extra time here on the euro in the European crossover because, like I said, I was going to be doing Blake's webinar, so we took our time there, and we're talking about the sentiment, how overwhelmingly bearish now the sentiment has gone, and we had a gentleman who's new. We're seeing the crude oil pressing into this 33.40. We talked about this 33.40, which is the bottom of that zone of 33.40, 34.29. I would expect a little bit of trouble here. I think we can press it maybe a little bit higher, maybe like to 33.50-ish, and then I would look for the market to kind of pull back. We're a little bit stretched. We talked about before we came on air that we got a very nice buy signal earlier in the morning off the crude oil. I think it's a little bit stretched here, but the market really wants to go higher overall. We saw that drip lower from those highs that we saw yesterday. We talked about the 33.57, and from there we sold off pretty good to 32.49, and we're just basically reasserting ourselves. But just want to give a thought process because we were talking about the crude oil right before we came on. But getting back to the euro, take this off here. We talked about this move here, and I said that I thought this was going to be the death knell for the bulls because it happened too far. I thought this last move, if you remember, I even shorted here. I took on the market at 12.68, and it was still going up in my face. And I just thought when we came on the air with Blake at that time, right after we put in these highs, we were right here in the 13th. I said, you know what, this is it for the euro. I think this is a death knell. We came back. I thought we'd pull back closer to around 200 pips, maybe. I didn't know we'd totally come apart, but we talked about on Friday why we thought the market could go on and rally back because it had the bid with the Brexit summit. But once we got past that Brexit summit, we talked about this yesterday, why it opened the door for lower prices, and why 1036 I thought was a good value area on Friday would not be a good value area now, which was yesterday, and we were looking for a move down to 1015, which 1015, we discussed this yesterday, it was a very, very key level from which the market finally broke above, rallied up to like 1214, fell back to 1015 before it rallied 700 pips in August on the backdrop of the Chinese debacle. That being said, like I said, we came down, we were talking about 1015, we were saying, hey, this is a great place to cover, the 1015, you should be covering. We got lower here, and I said, I think, and on the inside call, I know I said it here, but on the inside call, I said, I think 1004, and just the level itself is going to be defended. That area would be defended. We could get a little bit below 10, but it would be defended. We did see a nice rally up to about 50 pips of that before the wheels fell off the caboose on the German IFO. So once again, the sentiment is overwhelmingly bearish on the euro, which is, you know, like I said, I think it was Costine was asking, and like I said, stating is that, you know, just 10 days ago, the sentiment was overwhelmingly bullish. And then now everything's turned all bearish. But I think we're coming into a great area of value. We talked about this area yesterday, this 984. But after this dip, and once again from a price structure standpoint, is you can see here we're just not getting any lift. And that's why I think that this area of 964 is going to be a pretty good area. I would like to see them shoot past this 984. And this is an area I'd definitely be interested in. I think that we can get a more sustained bounce from 964. It doesn't mean we can't come to 945, and I've got that as a bias pivot. But we did talk about this earlier, why the 963 is pretty key, even just from a level. Now the 984, 1115 is the bottom of this zone. But we can see here that on a more recent basis, you look here at 963, you can see on the when the market had fallen down to about 720s, the ultimate rally took us to 963. I mean, we're a little bit higher, but basically 963. Before we fell back 150 pips, We rallied back, and ultimately we ran out of gas again, right now at 963. Yes, we did come up to the bottom of the zone, which is 984, but I'm just saying there was a lot of battle here at 963. We go on and pull back 100 pips, and I'm just saying from 963, actually from the high right here, the 984, we pull back 125 pips. But from here, we pull back 100 pips, we rallied again, and where we run out of gas? Once again at 963. And we're seeing the crude oil struggle here at this 33.40 like we talked about from the 2-hour zone. I think, the risk would be like about 53, 55, but we're struggling here. I think that overall we'll probably pull back into the teens before we reassert ourselves, maybe back into the single digits. But anyway, just thought I'd reference that because we've been talking about the crude and we're at a key level. So anyway, so from here is the 963. We make another run up here. We run out of gas, and we pull back off. And we pull back a pretty good chunk of change right here. Pull back about 180 pips. We establish a double bottom, 783, and we rally back. And where do we run out of gas at? 963. So when the market finally breaks out, and you remember, I'm not trying to pat myself on the back, but I was the one that told y'all. We're breaking out. I said that at the time. I go, we're breaking out. This market is about ready to really take off. And I had that discussion with Blake. And it was on a Tuesday, and I thought, it's probably going to break out within the next day, I would think. And it actually broke out later on that day. And the reason I was doing that is because I was looking at what was going on with the dollar yen and also the dollar CAD. And we got this huge breakout, which we did. So, but this area is very key, this 963. So it makes sense that they'd come down here and you'd probably, at the very least, you'll see it's a pretty decent short covering. The 10-15 is still key, and we've talked about that. We can go back here. Before we took off like gangbusters at the August Chinese debacle, where did we find support? We found support right here, 10-15. Now, when the market broke out, it rallied up to 12-14. We pulled back exactly 200 pips. We got a minor double bottom. You see this right here? It's 10-15. And then we launched 700 pips. Obviously, there were some things that happened because the whole idea with the Chinese stock market, the wheels coming off the caboose, there was the thought about, they were buying back euros to sell yuan, that trade. But like I said, 10-15 is very key. But this is on a very longer term basis, so it doesn't mean that we don't overshoot. I mean, they defended that 10.04 like we talked about yesterday, and you were able to rally almost right at 50 pips. But the sentiment is very overwhelmingly bearish. The same way the sentiment got overdone up here on the upside when I said, hey, this is a death knell for the bulls. And like I said, I don't forecast, but I do call levels. But I think that this area, this 963, is going to be very, very nice. If we can get, because the sentiment is so overwhelmingly bearish, I don't know what it'll be. Maybe it can be the conference board, consumer confidence, but maybe we can take us to this dip. And I think this will be very well supported right here. I think this is a very good area to go in and come in and take longs, because I think we should be able to see a nice bounce. Because at this point, anybody that's been short is going to be looking to want to cover. So you're going to get people that are wanting to cover, so they're going to buy. You're going to be people that said maybe they came in at 10.15 or 10, and they said, you know what, I'm scaling in. I'll add some more at 963. On top of that, besides being a very key level, you can see it coming right across here, how 963 has been an area of resistance, 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 which now will become support. But let's back this up. $964 happens to be the 61% of the move, the pullback all the way back to 709, 710, whatever you want to call it, up to 1376. 964 is at 61%. So you got a lot of confluence there. Not only do you have the levels coming across, I mean this level here coming across, you're overshooting the value zone. I mean this zone here, I'm saying that value zone, but this zone, 984 to 1118. So some good support in there from the bottom of this zone. And then the overall huge support we talked about, 1015. So I think this is going to be a very good area from which the market can get a nice bounce. And your risk is very, very light because then you've got 945 at your backside, which is what I consider the bias pivot. So that's where we stand here on the euro. For a little bit closer look, we're looking here at the 30-minute. Once again, that zone. We've got 960, and in here I've got the bias pivot at 948. So very, very reasonable risk at this point. I think to get long. I think I'd like to see another dip. I'd like to see them take out this low and then see a very nice reaction. And I think that we should be able to go and see that. Wayne's saying he has no sound, but David said he didn't hear sound, but now he hears sound, and I don't have anybody else complaining. So the only thing I could recommend is that if someone has any sound. We have had issues with Citrix, and I'm actually, when I do the webinar, I always listen with some iPod earphones, whatever you want to call it, iPhone earphones, and I listen to the webinar at the same time. Via my iPad. That way, if we're having any audio issues or whatever, I can't hear anything, then I know it's really happening because it's me, or if it's not happening because I can hear. And I can certainly hear myself because I'm listening via the webinar, just like y'all are. We just had the crude oil tick up to 33. It looks like 53, and now we're 47. This is that area here. I think the risk is to 57, back here that level. But I still would think, although I think the market wants to work higher, I think that's the way you want to play it. But I could definitely see it starting to going to pull back a little bit. So let's go on and move it here to the dollar yen. And I got to admit, this one has really surprised me. We talked about this area here. We got a bounce here, and we talked about the 1266 being an area of value. And the market, and this was on Friday, and the market dipped below that, and we talked about this yesterday, but there was no follow-through, and we rallied up. To me, I thought I would not want to be short or take on a short until we made it into this level here, above 14, right here, this 1394 area between 1394 and 1430. I figured that at least take out 1347, but you can see here the market has rolled over. And I guess, once again, just like the euro, it's so overwhelmingly bearish. And to be honest with you, this really surprised me here that we were able to take another leg lower. They are really putting the BOJ's feet to the fire. And obviously the sentiment is really overwhelmingly bearish, because I could see that if the SPOOs were trading like, let's say, 1918, 1915, this would definitely, this move down here would be warranted overall. I mean, realistically, I think for the market to be down here, the SPOOs really need to be, if you're looking for a comparison, this would really, to me, equate to the SPOOs trading at about 1905, 1908. But I could see, with the sentiment being bearish, okay, they'll take it down to this level with SPOOs at, let's say, 1918. The SPOOs are at 1935 and a half. So, I mean, the sentiment is so overwhelmingly bearish, it's unbelievable. I can't even believe, I mean, and it's not like the dollar isn't doing great against, it's not like the dollar isn't doing great against the euro. I just think that, like I said, it's, you know, with the yen, it's kind of crazy because the Aussie dollar is doing exceptionally well, but the yen is just continuing to strengthen, like as if it doesn't care. So at this time, the only area I can see right here is right there. And actually, that's where we found support. Just notice that right here. So this 1185. I think that if you're short, I really would be tightening out at stops, if not looking to go on. And it doesn't mean you can't go lower. What I'm saying is, I think that the risk reward isn't good, okay, at this level, because that's what I'm seeing. You see, if you look at this, you see that's the prior reactionary high, and actually I'd move that up a little bit. There. This is the prior reactionary high, and then this is where the body opens and closes here. Then the market rallies, and where does it find support? Once again here at this 1185. So the way I do my levels, I try and get the most confluence. I never try and set the level. Move this back up here. I never set the level at the high and the low. To me, that doesn't make any sense. Because how many actual buys got done or sells at the bottom of the high or the high? So I try and get a confluence of the most touches, and that determines my level. And you can see here, this is exactly where they found support at. I just think that from a risk-reward standpoint, I wouldn't want to continue to be short the dollar yen. At this time, I think to push lower, I wouldn't necessarily say you're picking up nickels and dimes in front of the bulldozer, but I just don't think that there's that much to be had if you're trying to push beyond this 1185. Alan says, is the Aussie short? We actually were looking for higher prices in the Aussie, and I think actually we were looking at the Euro Aussie, but we also looked at the Aussie dollar, and I was saying, hey, I think this 78% is where you want to go and get out, and that's where we're almost there, and we'll jump into that quickly. Tarun says, hey, Paulie, I had some audio issues, but I restarted the session and it was fine. I don't know what's going on with Citrix. Like I said, I'm just glad it's working now, but we've had those issues with Citrix. I don't know what the deal is with them. So let's go on and move into the Aussie dollar. So Alan says, is the Aussie dollar short? You know what? I'm going to compare this Aussie dollar. It's not the same thing, but I'm kind of comparing to a certain extent the way crude is. So we had this fall. We were talking about this yesterday. Really, I was talking about levels going up here, going up there. I even took a scalp here and took some beer money while I was on the air. And like I told you before, I don't like to trade because primarily I scalp. At the length is the long trade for me is actually just a day trade. So I don't like to take trades on, but I just couldn't. Control myself not to scalp when it got to, I think it was actually in the 33 teens at the time. And it did pull back. I was able to get out with a small profit, like a little bit of beer money. But we talked about this on the way up, and we talked about the significance of this 33.57. But I think the market wants to go higher. Well, we came down here and we talked about this area of value, 32.49, and we did get some nice confirmation down here. And we're saying that the crude oil really, I think, wants to go higher, although I can see it pull back. So the thinking is you don't want to really be an aggressive seller. You could come in at certain opportune areas, but you really want to be a buyer overall. That's how I feel about the Aussie dollar, although it might sound like I went about this on a roundabout way. Now, we talked about this yesterday because someone asked me. Like I said, I don't even trade the Aussie dollar anymore. But like I said, I was coming for a break, so we threw something up there. Someone was asking about it, including the Euro Aussie. He said, well, let's take a look at it. I go, well, I really don't see anything. The market looks like it's built up. I was thinking to myself, built up pretty good. I really don't see anything until we get to the 78%. And I go, look, if you look at this, we've got some nice levels coming across. Come over here. See how the market rallied and ran out of gas right here, which is 72, 77. And notice how that's support. So we're just going to draw this so we can make this a little bit more pronounced. And I never like to go for the actual high. Put this on. We'll take a look at this. And we're going to talk about the Aussie. So this comes in at 72.75. And when I looked at this yesterday, I said, wow, it's hard to tell. There's a whole lot of stuff going on here, but it looks like it's trying to move higher. And I knew that things were, one of the things that I don't think we had a chance to notate yesterday, and I meant to, was that copper has come back a long way. Copper, when I was looking at copper, about 6 weeks ago or so, I think it was, I'm trying to look at something real quick. Hang on. Okay. When copper, we were looking for support around the 195, 96-ish area. It got as low from what I saw, it was like down to 192. And, but now we're trading at 214, and things have started to turn around. And I think that that's actually been conducive. I think one of my screens is out. Oh, no, it's not. No, I was looking. But anyway, just look at the SPOOs. It's trading at 1935 and a quarter. Yeah, okay, 35 and a half. Okay, but we've got the copper back up to 214, and I think I think that's also been conducive for the crude oil, because it's starting to see things balance out around the globe, and that's also added to support for the SPOOs. Well, with copper moving higher, that opens up the door for the Aussie dollar to move much higher. For that to go and move it much higher. So we took a look at this yesterday, and I said, well, you know what? It looks like it, if you're long, the area to go that's going to target is this 72, the 66, that's the 78%. And just above that, we have 72.75. I would not want to be short the market. What I would do is, if you played it from the long side, I would take profits. As you moved into the 78%. I would go in and take just some very short-term profits, let the market pull back, and you can reload. You have to be very careful with the Aussie dollar. And the reason I'm saying that is because this market is a trending market like nobody's business. And it will run you over if you get on the wrong side. Now, you've seen a lot of up and down action with the Aussie lately. So you've been like, I don't know what this guy's talking about. I shorted it here, and it rallied against me, and I thought I was in bad shape. And before you know it, I was back at flat, and I was able to get out for a nice profit. Let me tell you, this market can trend like nobody's business. I'm not able to go back that far. But once it gets going in one direction, get out of the way, because it will not let you get out. You have to be careful. I think that if you're trading Aussie and you're thinking about shorting it, we'll probably see a decent pushback from the 72.75 area. If you look at back here, and I pulled this up on a 4-hour, which I don't even use 4-hour charts, but take a look at this. That's pretty huge. On the way down, 72.75, support, 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 breaks it. When we break 72.75, we go south of the border, we rally back, and where do we find resistance? 72.75. We pull back, we attack it, again, we get above it, and then we have a big battle zone. Bulls and bears really fighting at 72.75. We make one last charge. The bulls can't hang on. They try and hang on with their fingernails, and then the market breaks lower and lower. And then here we are, we run out against 72.75. We get above it, and it's support. Then we're back to being a battle zone. I would think that the market will see a decent pushback at 72.75. But I necessarily wouldn't consider shorting this unless you're keeping a very good close eye on the copper market. If you see the copper market, let's say it moves, I don't even know where it's at right now. Let's say it moves to like 216 or something, and then you see a real good reversal on the copper market. Then you could probably set yourself up for a short if you really want to be aggressively short and maybe make a move back down to 71.40 or something like that. But I would be very cautious against shorting. I'm just saying is that the way to play this was from the long side. We talked about this yesterday. I would be exiting out on moves to the 72.66, which is 78%, and just above that. We'll just go and mark this off real quick. I never look at stuff on a 4-hour chart, but this is giving you an excellent perspective. There's 72.75 coming across here. You can see how the significance of this, and 72.66 is 78%. And we'll go and mark this off here. I would be exiting longs against the 72.75. That's the way I trade. I trade differently from Blake. I mean, if Blake was long, he might say, oh, I might, take a little bit off, and if it got above 72.75, I might go in and add some more. I trade differently. I scalp, day trade. I know you have to be careful. I do know you got to be careful with the Aussie. It doesn't look like it here, but when this thing gets trending, it will run you over like nobody's business. So the only way I would consider shorting this market, I'd have to see it get above 72.75. I want to see it pull back from here, and you need to be looking at copper. If you see some kind of thing like a reversal in copper, then I think you can go in and take a short. I would not be getting short this market without that. It's got to get above the 70, got to get to the 78%. We got to see some real good trouble here, and then you got to take a look at the copper market. If the copper market gives you some kind of reversal, look at the copper market, then fine. Then go on and go for it. I wouldn't do it under any other circumstance. Well, that's what we got here on the Aussie dollar. Chris says the 200-day moving average is at about 72.75. Well, boom, there you go. Then that's a great point too. That you're seeing more confluences there, suggesting that this is probably stretched as far as it goes. Dado says, "Hey Paul, thanks for everything. It's not easy to cover 3 hours in a row. Looking at the SPOOs and the UJ, the S&P is trying to push higher, but UJ, however, cannot follow. Some divergence again. Your thoughts?" Like I said about this dollar yen, and we'll switch into that quickly again, and then we'll move into the SPOOs. I got to admit, this was a surprise here. Because, like I said, on Friday, just to reiterate, for those people coming on now, and by the way, for those who are expecting Blake, Blake is still sick, still very sick. I mean, really, really sick. I don't even think he's even had a chance to do too much of anything. Hopefully, he'll be back tomorrow. So I'm covering for him. But anyway, then Steve and Bill B will doing the Lunch Money webinar. Just one moment. Stephen SMB Jordan says they'll intervene if necessary. I have tweeted out some of those SMB headlines, so not that this isn't a big surprise, but So anyway, we talked about this 12.16.66 being an area of value, and why on Friday I didn't think it was good to go and short it. We dipped a little bit before that, but there was no follow through. We rallied back up here. I would have at least expected us to get above 1347 to push some stops. So the fact that I guess we couldn't even do that, I guess that made it even that much more weaker. And I haven't been following the Asian session, so we may have gotten a report here that machine orders or whatever that pushed it, somewhat lower. But anyway, we broke lower, but we talked about this. The only other area that I can see here is here. You can see this reactionary high on the level up, up here, and then on the, you're seeing some good value here, the close, the open. They test it, it holds here. The market rallies up almost to 1250, and where do we find support on the way down? Same here, this 1185. I don't think that there's much left here. Now, that being said, good point that Dotto says. I mean, frankly, I'm really surprised because I would equate this to being with the SPOOs. I just said that a few minutes ago. With the SPOOs trading at around 1208, 1205. At least if the SPOOs were, let's say, 1218, the SPOOs are trading at 1936, 1935 and 3/4. From what I can see, I'm looking at because I think one of my monitors. No, it's working fine. I do have a problem with one of my other monitors at the moment. But anyway, so it's hard to fathom that we're this weak and the SPOOs are holding up. I mean, just I guess it's a testament to the yen's strength in the sense I just think that, in some ways it doesn't make too much sense. I mean, there's reasons. Well, I was talking to some gentlemen yesterday via DM, and the upcoming BOJ meeting, they do expect them to have some kind of support. The key thing is they need to have support. Wow, we've really overstretched. We're going to have to take a break. Let me just take it to the top of the hour, but I will take a little bit longer break. The key in this meeting coming up, but it's not for a few weeks, is that they support quote-unquote private assets. And that will allow this market to move higher. But I tell you what, this looks pretty doggone sickly at this point here that we have not been able to add on. I would have thought that the market would have gone something like this, and this, and this, and kind of dawdled around in here for a bit. And then as we come into the March, there would be, the possibility we could move higher, and then if the BOJ supported private assets, we could make a move up here, okay? This really surprises the hell out of me. That being said, I just don't think that there's any real, from a risk-reward standpoint, okay, you can, however you want to trade it, trade the one. If you're short and you're saying, I don't know what you're talking about, I'm short and I'm doing really well, well then fine, you can, put your stops above 1260 or 1266 if you're thinking this move could be a whole lot lower. But if you're flat, I just don't see that there's any good risk reward at this point to put on the shorts. Although I would have expected us to move higher, I said I wouldn't have been interested in getting short until we got tested into this zone here. But obviously we didn't, so there it is. But I just think that we're pretty well stretched here. If you look at the SPOOs, there's just no real reason that they're going to all of a sudden fall apart. So I just don't even see what the hell it's even doing down here. I really don't. But it is what it is. That is where it's at the time. So let's go and move into the SPOOs. Simon's saying he's hearing no sound. Hang on one moment. Let me put this out here.